The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 6th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you're going to make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. And inside that heading, please put radio show question, and, of course, inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded off 81 points at 21,397. S&P down 11 points. She's trading at 24.21. NASDAQ 100 off about 4.10, almost 0.5%, down 25 points, trading at 56.23. Russell 2000 down 0.6%. That's 8.5 points. The semis are flat. Gold is flat, trading at 12.22. Silver up in nickel, trading at 15.95. Light sweet crude up a full buckaroonie, trading at 46.14. Leading the charge here to the upside, it is Beijing Limited, maybe? Beijing, I don't know. Billie Jean, it is BGNE. That's the ticker symbol, up 25% or $13. I've never seen the symbol out here. So HSN, that's on a buyout. That's up 8.55 by QVC. Priceline, PCLN, that's up 6.46. Google's up $3. Mazor Robotics up $3. Mercado Libre up 3 as well. To the downside, it is Tesla, $14 or 4%. Regeneron is off $9.50, nearly 2%. Credit Acceptance Corp down 3% or about $8. PetSmart off 7. L Brands off 7 and change. Ulta Beauty down 6. Chipotle off 5.50. Of course, I want to take a look at what you want to look at, and what you want to look at least Michael wants to go ahead and take a look at. He sent a question, Michael from Nashville. He sent a question earlier this morning. Just simply said, "Hey Steve, could you give your opinion on the show about entering a trade in DUST, DUST?" Now, DUST is the 3-time ETF short for the gold miners out here, for the mining index. Can't say it's gold and silver. So let's try to go answer Michael's question. Now, to answer Michael's question, Michael, you didn't give me kind of like the time frames and so forth that you're trading with. So when you guys do send an email, give me, is it daily, is it a swing trade, is it you're looking long term, just something to give me so that I can assist you better in your decision making out here. Let's just go with the data that we have. We'll take a look at some different time frames out here, and perhaps one of the reasons that Michael is considering, there may be many, but one of the reasons why Michael is considering entering a short trade in DUST, which would be assuming that the GDX is going to continue lower, is the mere fact that the GDX itself does have a confirmed A to B equals CD to the downside. Now, you might say, what in the Sam heck or some other word did you just say out there? Well, if we take a look at that lightning bolt structure, and we like to look at that because it helps us to project price, we're really looking at swing points. Swing points nothing more than where you see a change in trend occurring out here. So we're looking at the beginning point of our lightning bolt, that A to B equals CD, being that June 6th high, 23.86. Price makes a beeline down to a low on June 20th, gets down to the 21.75 level. Then we see a small change in trend, little retracement, 50% retracement. That suggests that if this is an A to B equals CD pattern, it should have some pretty good energy to get actually below the 1-to-1 A to B equals CD. You see, the A to B point gives us a measurement to just simply add to, in this case here, subtract from the actual C point once the market generates that swing point for us, because the market's doing 75% of the work for us. It's identifying for you and I A, B, and C. And that gives us D, the final destination or potential destination. And when you cross a swing point, in this case here, the B point with volume, June 20th, there were 31 million shares. That was crossed with volume, a gap to the downside on July 3rd. July 3rd was a shortened trading session. That had 43 million shares to the downside. So the reason that Michael is looking at this trade, or one of the reasons to look at this trade, is because you have a confirmed A to B equals CD to the downside. That takes price in about 2070, and 2070 will get you back into the swing point for May 4th, which has volume of 70 million shares out here. Now, 70 million shares versus the 43 on the way down versus yesterday 58 million shares, which hasn't tagged that area. I would have to say to you, Michael, that the reward risk isn't in play. I posted the question to the folks inside the Tigers Den to say, hey, what are your thoughts on entering a trade in dust? And one said, I'd rather have Bitcoin. The other said it's too late to buy dust. I agree with you. It's too late to buy dust. Another says Nugget and Dust will take your money over the long run, in his opinion out there. We've got to go with, at this stage here, I think it is the reward risk is not in play for you to go ahead and take a look at the dust trade, even though the GDX may in fact make its way to $20.70 or $20.13 out there. Now, that's what this chart is showing us. We haven't even looked at dust, but we really don't need to, because this is going to give you the better information as to whether or not you should entertain one of those triple plays out there. Now, let's take a look at, to the extent that, so that's the answer there. Let's just, as long as we're inside the mining sector, you and I, let's just go take a look at gold, because there is that directional behavior that exists between gold and the miners out here. And if we take a look at gold on a 30-minute basis out here, are there any clues as to what it wants to do? And I have to say the answer is no, not really. You see the sideways consolidation pattern that is out here. You might say, what is that? Well, that would be this. Let me just go ahead and get the rectangle out here. This is this rectangle basically is our sideways consolidation. And until that is broken, Michael, everybody else that's listening out here, until it's broken to the upside or to the downside, we could just be trading sideways. The range out here with regard to gold in this consolidation, about 12.30, let's call it, down to about 12.18, somewhere in that range out there. That gives you a measured move if, in fact, this ever gets broken to one side or the other. Now, what we'll do out here, there are some indications also, by the way. If I take a look at the 2-hour chart, we can see that price has moved lower, done with less relative energy. The bulls did step in at about 12 o'clock noon yesterday, indicating that gold is trying to form a bottom. But if it's going to find a bottom, it's going to need some help from your friend and mine, and that's a Japanese yen. And right now, it's not being very friendly to gold or T-bond futures out here, as it's trying to take on a resistance level of its own. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader.
As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 71. S&P is down 10. Question that came in yesterday. My apologies to you, Pradeep, for not having noticed this email. You said, I have wheat. W-E-A-T is the ticker symbol. Have a 10% profit on your position. If you could give me your thoughts on possible exit strategy or sell price for the trade, I would appreciate it. Thanks. Now, here is the I'll do the best that I can. But here is the difficulty when you are trading, when anybody's trading any ETF, and that is that you really want to understand what is inside that ETF. Now, to complicate matters here, if you're trading one of these ETFs, this is an agriculture ETF. You already knew that, right? Because wheat meant wheat for the most part. And if you are not accessing the futures contracts to see what's going on there, see, whatever pattern it is, whatever I take a look at inside the ETF, it's garbage. When I say it's garbage with regard to the ability to try to identify where it is that the actual commodity is going to. So I'll give you what I can, but I'm actually saying what I give you, and I don't like to do this, it's really not valuable. What would be more valuable out here, and it would take time, is a real study of the holdings inside of wheat. And that requires you to be a farmer, understand weather patterns, understand history, things of that sort. If we take a look at, this is the Tecrium ETF, by the way, WEAT, the wheat fund. If we take a look at, as of the close of business yesterday, what you can see out here is that value-wise, in other words, when I say value-wise, I'm looking at 29 million of the fund, of the $81 million inside this ETF, are allocated to the September futures contract for wheat. 25 million, so basically it's a third, or close enough to it. 25 million is in the December 2017. That is this December's wheat contract. And actually 28 million, 27.7 to be exact, is in December of 2018. So you really have to be studying each of those contracts, try to identify where they might be going. And each one could be going in totally different places in order to try to identify where is it that the ETF might go to. And it really is it's unfortunate, but that's what you would have to do. It really is a complicated issue. I would say that the best strategy would be to learn to trade the futures contract, and that way you can have your protective stops in place in case something goes awry. Where's rye come from? Not from wheat, but I think that. So let's go back to WEAT and try to answer the question out here as best we can with the information that we have. And so at this stage here, you've got a nice profit, a 10% profit. If we look at this stock chart, is there anything that gives us a sense of pause? And the answer is no. But we do know that this ETF broke out on June 29th. 367,000 shares traded that day. That's the breakout. It was price closing above the daily market profile. Those are the blue horizontal lines on my screen out here. And you've got a retracement underway. And price can always come back to the level where it broke out. So that's going to be, if this came in yesterday and you were at a 10% profit, that would be $8.31 or so. So we'll just call it $8.80. That gets you about $7.20. That'll take you all the way back to where it broke out. I don't know if that's what what the period it hold is really difficult all that we can do is take things like expansions of swing points. So let's go do that. And by expansions of swing points, the swing point we're looking at out here is February 16th, that high, to the low out here on April 21st. And price tends to move in expansions or contractions. In this case here, the expansion of the set of swing points that's most predominant for my eyes, which they will catch, the 1.618 expansion, which is where price would move to and typically get a little tired, is exactly what occurred in this ETF, because that expansion would take it 840. And so today we've seen that this thing has backed up. It's backed up ETF-wise with fairly decent volume, 587,000 shares. We're only at 130, and that's after doing about 800,000 shares on July 3rd, but that was a shortened trading session. Is there anything here inside this ETF that suggests to you or I that one should exit? No, but unfortunately, it's really what are the underlying instruments doing out there. And rye comes from whiskey. Oh, now we're in good shape. What I can share with you, Pradeep, is if price were to fall below my red line out here, that's $7.68, that would be a problem for me. If I take this and put this on a weekly chart out here, and again, the more that I do this, the more horrible the information is that I give you, because it's really about those underlying instruments. But from an ETF standpoint, I would say projection-wise it'd be that dashed green line at about the $9.10 type area. This is a weekly chart. The week's not over till tomorrow. Currently, you've got a shooting star that is present. That can be a bearish reversal signal. Last time we saw a shooting star inside of this ETF, and you won't know till tomorrow, was back when the prices continued moving lower back in June of 2016. We can also see another shooting star that formed out here back on February 18th. So if at the end of the week, and I won't be with you tomorrow to be able to confirm whether this is the case or not, you can see what other shooting stars have meant to this ETF. So hopefully that information provides you with enough to decide what it is that you need to do. But go back and look at those futures contracts, if you would. I think that will provide you with better information than I can share with you right now. So that takes care of those questions. We had another question that popped in here from I did not finish the yen yet, so we will do that. But I see another couple questions ahead of you, I think, Danny, and that is where did it go? The questions were, Steve, is this turnaround Thursday? That comes from Harry Connick Jr., Harry B., and I don't know the answer to that question. The next one says, Steve, the QQQ tested the bottom enough. So I think from Top Dog and from Harry B., we can go to answer both of those questions. Is it turnaround Thursday? Well, the answer, and in taking a look at, have the Qs in essence bottomed out here, what we can do is go take a look at the NQ. We know what the, in essence, underlying instrument there is. And then we're going to go take a look at the 30-minute chart here for the NQ. We looked at this yesterday because there was a beautiful message, right? You and I, we knew when we were on the show that at 10:30 in the morning, it gave you one of those beautiful signals that said the market wanted to move higher. So therefore, if you were an intraday trader inside of the Qs and you were looking at 30-minute charts, you knew what to anticipate. Higher price, higher to where? Well, in this case here, price went up until it was singing in the key of G. No wonder, no Stevie wonder that it was doing that out there, and that's where price made its high. And then it moved lower. And it began moving lower, and at about the time period this morning when it made its low thus far, this was at 10:30 this morning, price started to move lower and did it with less relative energy. That's why that black diagonal line is on my screen. And then you had the bulls rush in. The bulls rush in. They created that nice little piercing candle. That gave an indication that from an intraday standpoint that the Qs had bottom. Then you had some follow through. We've got price above Stevie's red line. We've got price above the profiles. Harry B. What we can share is that the NQ is headed to 56.50 and change. Is that the bottom? It very well may be. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So to go ahead and finish off the question about the Qs or turnaround Thursday out here, here's what we know. And this is just really a follow-up conversation to yesterday. And yesterday, what you and I noticed, what we noticed in Ernst was that the NQ, the indice that really has been in charge on the way up, completed and formed a Gartley buy pattern. Now, when the day was over, it was a confirmed pattern out there. It was, in essence, a piercing candle that formed inside the NQ chart on a daily basis out there. And that's after completing a 1-to-1 A to B equals CD to the downside. To the extent that you are a follower of H.M. Gartley, you know what that means. And what that means is buy, buy, buy. The type of buy that is B-U-Y, not the other type that waves goodbye. Now, today, I don't know where this candle is going to finish. If at 131 the session was over, now you've got a hammer candle. So you'd have two bullish reversal signals at that A to B equals CD to the downside out here. What would I want to see as a doble Guy confirmation? I would say the 50, we're trading at 56.24 right now. I'd have to say about 58.37. You get across that, you stay above that inside the NQ. Then it was turnaround Thursday to answer that question. Another question that came out here is the NDX daily. Where is that oscillator unchanged line? Well, let's go answer that question. Let's put this chart up on our screen out here. Let's go ahead and put in, because the question was for the NDX, and we'll do it for both. We'll do it both for the indice, which is the better of the two to actually follow, but we'll do it for the QQQ series ETF. And as long as we're doing that, we should go take a look at the monthly charts for those ETFs out there. Should we not? We should. I just have to remember where I put those. But the answer to the question, where is Stevie's red line out here? The price level is 57.12.53. But you can see out here inside the, and here's where, this is a perfect example. And I mean a supremo example of why it's really important if you were trading this indice, well, you really wanted to understand, which in essence is showing us 6.5 hours worth of data. Now, you could make your decisions on 6.5 hours worth of data. The question is, would you? And the answer is absolutely, positively not. Maybe in the old days you would, but these are not the old days. These are today's days out here. And you would say, no, Stevie taught me that even if I'm not going to go ahead and trade the futures contract, I want 23 hours worth of data in order to make my decision on price discovery as far as what's going on. Because if we were going to make the decision based on the NDX 100, we don't have a bullish reversal signal from yesterday. We don't have one from today. Yeah, we've got the A to B equals CD to the downside. You know, it looks like this in essence. So we do have that, but we don't have that bullish reversal signal, unlike what you and I just took a look at inside the equity futures contract. For those of you that trade the Qs, that that would like to know where that red line number is, it's at 139.07. Same thing out here. No bullish reversal signal yesterday inside of it. And in fact, if price did close above 139.07 and you were short, your sphincter muscle would be getting PDT out there. That's right, pretty darn tight. And so that would be a level that you would want to be watching for. But if you're looking for early signals of a bottom that is forming out there, because there are folks inside the den that really like good bottoms, well, you're getting those signals from the daily. You got that signal from the 30-minute chart as well. And if we go take a look at our market profiles, just to go ahead and wrap things up out here, we'll go put up the chart for the NQ. We'll take a look at a couple of those profile levels. Where did Stevie put this? He put it right here. Disregard the 3-minute chart. That's the left-hand panel. But instead, you can look at the 60, the 240, the daily, and the weekly. And inside the 60 chart, what is this communicating to you and I? Basically, 56.37.75 is the number to watch. Same thing in the 240-minute. If you get about 56.37.50, price should find resistance at 56.78. Now, if price gets about 56.78, it's just a communication to you that price is going to head to 57.73 to 57.96. In essence, what we'll be saying is take that elevator back to the penthouse floor because it's done heading lower. So watch that 56.37.50 as a key number. Could be resistance and maybe resistance, but if it gets taken out, it ain't no resistance. Let's go take a look at, what do we want to look at? Oh, the yen. That's right. Danny said, hey, have we taken a look at the yen? So the answer was no, but we're going to go take a look at it right now. This is the daily chart for the yen. And the scary thing here for gold, for T-bonds, is in fact the way the yen is trading. If we go ahead and we turn off these descending trend lines and channel lines out here, just to go ahead and clean things up, let's go ahead and do that. Let's turn off our boxes. Let's turn off our trend line. Let's turn off our channel line and our trend line. And let's just look at the candles out here. Oh, I thought I turned off the boxes. There we go. If we just look at the candles out here, what you're seeing is the last 3 days, that's including today, we are trading inside of this wide-ranging bar. Very much like what you and I took a look at right back here. In fact, the bar was not as wide-ranging back on June 19th, but the pattern was similar. And as soon as there was a move above, quite frankly, the high from June 19th, 111.60, sometimes people use the close, 111.56. Not enough pips to really make a difference out here. And then what you get is the way the market communicates to you and I. Based on Japanese candlestick charting, it is a continuation move. It is that rising three move. You don't see it often, but when you do see it, you want to pay attention to it. Now, in this case here, what that really means is you move up to the next level of resistance, which is not that much higher. If we're just looking horizontally at this chart out here, what we are going to see is at the resistance levels right here on the trade session of May 10th. I think May 10th might have been the high, 114.37. Let me check the next day, 114.37, same price out there. And that was where the old bearish engulfing candle. So price should move up to 114.37 if it can clear the high here, Daniel, of July the 3rd. Can it move higher? It most certainly can, but that becomes the next projected area. And if price moves higher inside the yen, that'll keep pressure on gold. That doesn't mean, Michael, that you should go into the dust trade, because the equities could and may trade different than the actual metal itself. If you were short the metal, you'd want to be watching what takes place as price approaches that 114.37. Does this mean that it's going to turn into a continuation rising three pattern? No, you have to clear the high, close above the high from July the 3rd out here. But right now, the way that it is acting suggests that that's what it wants to do. In lieu of new information, and I don't see any new information out there, that is your coverage of the yen. So what do we want to look at next out here? We'll go check the email system real quickly. Of course, I'll wait for the next 30 seconds out here. And so what do we want to look at? Let's go look at Tesla. What is going on with Tesla, other than the mere fact that it's down quite a bunch out here? In fact, this thing, Tesla had almost made the measured move of its consolidation pattern, which was about 396. It got out to 386. Right, 386. Hey, not too shabby. Now price is just coming right back to the bottom of the consolidation pattern out here. Volume-wise, about 13 million shares back on April 3rd out here. Coming back with, and there was 14 million shares on the May 4th level. It's coming back with volume, too much volume. 13 million shares today. Let's finish taking a look at Tesla. We get back to this.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before, so now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 86. S&P is down 14. Before we go take a look at Tesla, hey, John in Sarasota, you sent me an email. Thank you for doing that. But I think there's a typo or something, and I can't make heads or tails. Your question, you say, is HHI or will it soon be a possible short? But I don't pull up anything for HHI. So if you could just resend me an email, we'll have the time to be able to go take a look at it. So back to Tesla out here. Let's go try to gauge where this is headed to. We can see that when Tesla made its top out there, it made it with your favorite pattern. That's where price moves higher, does with less relative energy. Of course, on Stevie's system, black lines start getting drawn. We pay attention to Stevie's red line. We also pay attention to the signals that the bulls and bears, their only responsibility when they go to work every day is to generate some type of bullish or bearish reversal signal. When they happen at the completion of a pattern, they have a lot of meaning. We can see that helped to identify the top. Price then has pulled back to one of those red dashed lines, one of those Tom DeMark setup levels out there. These are natural levels of support. We'll see if they're going to hold. 308 is one area. 300 is another area out here. And let's take a look at it. It looks to me like it's going to be able to get down through that area. And the reason is we were looking at volumes. But let's go just make sure that is, in fact, the case, because we're at about 14 million shares so far, 13.7 to be exact. And those swing points inside of Tesla were really taking us back into about the May 5th time frame. And it was right here, it was May 4th to be exact. As we take, in fact, let me get rid of this consolidation pattern now. Let me do this here, get rid of those yellow lines. So it's this swing point. Let's draw a red line. Then we can see that price is testing it right now today, or is very close. Let's see. The high is 307.77. The low today, 307.84. 13.7 million shares. We have a lot of time left in the trading session versus 14.1 million on May 4th. When you come into a swing point with volume, it says you're going to at least go test the bottom of it, so it opens up the door to 290.76. If it breaks through there, then you start looking looking for other areas of where Tesla broke out. Well, that would be the little breakout area, a little gap to the upside on May 3rd. That will be one area. It could be either the 284 or the 279 area. There's another gap to the upside on March 27, 270. These all become potential areas of where price is going to head to. But here's what we know right now is that any close inside 307.77, it increases the odds that price is going to go ahead and test that swing point, the low of it, from May the 4th at 290.76. If we just simply flip this over to the weekly chart out here, the weekly chart, if we just simply go try to take a look at any kind of volume, any kind of breakout, it really says that gap that we were looking at, this would be now on a weekly chart, the high of March 27th or the week of March 27th versus the low of the week of April 3rd really needs to hold. That's in that 284-ish area. 282, 284, because if you break through that, no reason for price not to head all the way back into the 180. Somebody posted in the den, I don't see it right now, that Goldman projected about a 180 move on Tesla P, and the reason that it did that was it's just going back to normal swing trading or normal levels where we would take a look at changes in trend taking place, and that takes you back in November 2016 out here, and that's in the 180 type level. Maybe a 50% retracement, but simply you look to the swing points. The swing points always become the target, and that's really on a weekly chart here for Tesla. That really is the target. Some junior swing points in the 244, but it's really that 180 level that their eyes are set on, because that is where the swing point is on a weekly basis. TSLA. Okay, too much time probably spent on that, but it's good to be thorough. Let me go see if John was listening, and he went ahead and sent off a new email, and if he did, I have not received it just yet. So let's keep looking at a couple of individual stocks, unless you guys in the den or gals in the den have something that you'd like me to take a look at. Just go ahead and punch it in, and we will go do that for you post haste. Let's go take a look at what else is moving to the downside out here. 13% L Brands, LB is the ticker symbol. That's a gap to the downside with some big volume. Their net sales were down 6%. And that is what has caused this move out here. And that's headed back to its this thing had broken out off of the bottom on April the 6th. Now, you like to see when prices come back to breakout areas, but you like to see it done with lighter volume. Well, that was a breakout with 14.8 million. You're doing 9.3 million. One could argue it's going to be lighter volume. But, boy, it's a wide-ranging bar to the downside. L Brands very likely to test that swing point low at about 43.10. Could bust through that low for sure. And if we put this on a little bit longer term chart, how about a monthly, and get some data, that could set up an A to B equals CD to the downside. There may already be one in play out here. There's not a confirmed one, because on a weekly basis, there was 103 million shares for the week that began May the 1st. And that level was not passed. Well, let me take that. It was passed with 100 million. It's close enough. It is close enough, and if we go take a look at that price projection out here, this again is L Brands, LB being the ticker symbol out here. We can see that its price projection is 38.56. I would hearken to say, as much as I'm allowed to say hearken, that you would more likely be looking at a price move into 27.38 type range out here for ticker symbol LB. L Brands. What else is moving to the downside? Let's take a look at Biogen, BIIB, because the IBB has looked pretty darn good out here. Again, this is the monthly chart that we're looking at for BIIB. Nothing that we can see out here. Let's just go to the daily chart and see what it is we're looking at. So this is pulling back with light volume. 607,000 shares. Had really a set of nice wide-ranging bars out here. June 19th, June 20th, June 21st. Good volume there. 3 million, in fact, is what it's trading into. So as you take a look at BIIB, let's go see if there are any profiles that this is pulling back into, either weekly or daily out here, and nothing that shows us support other than all the way back down to the 253 to the 249 area, and I'm not suggesting that that is where this is headed to. So as far as the IBB goes, IBB versus BIIB, let's go see what it is doing out here today. Also pulling back with light volume. Now, in the case of the IBB, it has found support, and that is the bottom of its daily profile, 310.27. I did hear that John Logan's going to be doing a workshop a week from yesterday, and you can go ahead and test his scanner. Now, folks, that is something that each and every one of you should take advantage of. I would only suggest that you do that because I use it all the time. I would never ask anyone, ever, and I mean ever, to do anything that I have not done. That just doesn't make any sense to me. But here is the scanner. I'm going to go ahead and put this up. This is that old heat grid out here, which is very helpful. Depends on what type of time frame trader that you are out here. But specifically here from the U.S. markets, and you can make money in plenty of markets out here. But if you look at the U.S., you got the S&P in column number 1, rows number 4 and 5. You can see you got the S&P 500 as well as the NASDAQ down below. And so this helps you to understand on these little speed dials how many stocks are above or below the profiles. It gives you great, extraordinary market breadth data. Come on over to the homepage of TFNN.com. Sign up for John's workshop. Get this profile scanner on your desktop right now. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. John, thanks for resending the email. The ticker symbol John wanted to take a look at is NNI. That is for Nell Net Inc. out here. And one of the reasons I think that John is taking a look at a potential short is because he likes how Stevie Wonder sings in the key of G. And if we take a look at the low that was made back here at the end of May, and we start doing those wave counts to the upside, what you're going to see is 2 days ago, this made that seventh wave move. Now, oftentimes when you get to wave number 7, that's where you can see a change in trend begin out here. In fact, yesterday you had that nice little bear sash candle that formed, giving you a signal that this might want to retrace out here. The key, John, today is thus far all we have seen is a test of Stevie's red line. That price point, by the way, is 46.64. So for another confirming signal, you would most certainly want to see a close below 46.64. You're at 46.77. Do those 33 cents or so make a difference? Yeah. It makes all the difference in the world, because what this has right now, still has, is a rising price oscillator. That's the bottom panel. That's the difference between two exponential moving averages, 19 and 39. And therefore, if you are traveling above Stevie's red line, you have a rising price oscillator above zero. And there ain't nothing more bullish than that, even if you have a seventh wave or potential seventh wave move out here. Because quite frankly, you can easily make several cases. You can say it's in wave number 7. You can see it's in only wave number 3. You could even come back and say, well, it's really only in wave number 1 to the upside. Now, that's a daily chart, so I get it. I can see one of the reasons why you would take a look at this. Now, let's go look at longer term. What does this chart communicate to you and I on a longer term basis? Longer term, I mean the monthly chart out here. And in the case of the monthly chart, you got a nice hammer candle that formed back here in January 2016. So you know that that is a solid bottom. 27.80 to 33.22 out there. Now you're at 46.67. It's possible there's an A to B equals CD to the downside that is forming out here. There's a possibility. If I take a look at profiles now, let's turn on. I should give this to you. The weekly profile. Yeah, that's what shows up right now. Prices trading above the weekly profile. So that's just outright bullish. If I look at the daily profile, even though we're on a monthly chart, prices trading above the daily profile, 44.30. I just mentioned the TAS market profiles out there, and we apply these to the individual charts as well. And when you're trading above them, it helps you to eliminate one side of the trade. Well, on a weekly, even though we're looking at a monthly chart here, we have the daily and the weekly profiles, and they suggest to eliminate the short side of the trade out there. Now, they are not going to help you to time the top. You've got to use other patterns like that seventh wave move, price moving higher, do it less relative energy, things along those lines. The completion of an A to B equals CD to the upside out there. But the profiles are saying not so fast. If I take a look at some channel lines out here, here's a nice rising price channel in this equity out here. If you're going to short it, you'd really rather short it from the highs out here, from the December 2016 area, so a bit higher out there, and you'd really like to see some other type of signal. So look, your reward to risk, you'd have to say, is if you took the short trade now, you'd be watching for support at 44.30. Maybe price gets down to $40 out here. You know, is that type of reward to risk that you want inside of this equity? And it may be, because when you have those seventh wave moves, your stop really is just above the high of that level, and that would be the July 3rd high out here. So, John, I hope that that helps you out. Thanks so much for sending that. Folks, stay tuned. Your favorite polar bear of mine, David White, is up next. Hey, I won't be able to be with you Friday, Monday, or Tuesday. Maybe on Wednesday. So have a great week. Have a great weekend. And I look forward to catching up with you when I'm back next week, middle of the week. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.